right. Greed works.
Welcome everybody to another strategy game episode. This is RakeM, your host, and today we're going to be talking about Wall Street Raider. It is one of my top 5 favorite games to play. It is a stock market simulation game. Most of you probably haven't heard of it. If you have, you may learn some things from how I play it. If you haven't heard of it, it's because it's an independent game. It's sold strictly off of the developer's website, and the link to it is down below. You can get a shareware version for free. If you decide to upgrade, the price of the game is as of today, it's $21.95. If you want to get the 150-page manual, yes, you heard me right, 150-page manual that comes with it, the price for that with the game is $29.95. So my history with the game is long and storied. I have been playing this game. It originally came out in 1984 as a DOS game. It's been in constant development since then. They have consistently upgraded it every year. In I believe it was 1999 that they moved it over to Windows, and they added commodities. They've also added, as of this release, 7.6, they've added interest rate swaps, prime and subprime mortgages, along with the crash scenarios that go along with subprime, junk bonds. You can sell stocks, buy stocks. Here, let's just go through the list of things that you can do with this. Here's what you can do in this game. You can trade stocks and bonds. You can trade stock options, both calls and puts. You can trade in commodities and commodity futures. You can trade in derivatives in the form of interest rate swaps. You can short sell stocks, options, commodity futures, or the stock index futures. You can take control of companies to improve their performance. You can take over banks and set their lending practices, or cut off credit to specific companies, especially competitors. You can speculate in high-yield junk bonds or risky subprime mortgage securities. You can create your own startup companies. You can issue new stock and raise cash through an IPO. Issue corporate bonds to raise cash, private placement stock offerings to raise outside private money. You can conduct leverage buyouts, do white knight defenses, you can buy up distressed debt, launch antitrust suits for monopolies, or against monopolies, I mean. You can issue mass layoffs and restructure your company to increase efficiency if a company is distressed. You can elect yourself as the CEO and collect a salary from the company, and if the company performs well, collect stock options as well. Increase dividends to your own companies or cut off their dividends to conserve cash. You can fire the existing management if it's not performing. You can do asset recapitalizations, downsizing, asset liquidations. You can increase or decrease R&D spending in order to get the most out of your operating assets. You can manipulate earnings using hidden accounting reserves. You can improve cash flow by reducing capital spending in order to pay down debt, or you can diversify using any and all methods to get the stock price back up in a company you control, including sometimes engaging in unethical but risky actions. So it's a very robust simulation. It's challenging. There are some gotchas to it that you would want to avoid, but I'm just going to show you how I play it, and I find it to be challenging and just a ton of fun. My history with this game is over 10 years old. I've been playing this game since version 5.0, I think, is the first version I purchased, and back then it was a lot less robust than it is today. I was pleasantly surprised to see some of the things that were added. But here's a look at the 5.0 screen. As you can see, it's still kind of busy, and I'm not going to get into what the differences are in the different versions, but here's 6.4 where they've added commodities, and now 7.6. So the way this game works is you start out with anywhere from $100 million to $1 billion, and the goal is simple. You just try to make as much money as you can as fast as you can. Now there's 2 ways that you can go about doing that. You can buy stocks and bonds and hope that their value increases or that their rate of return is significant enough to beat taxes. And the other way is to go ahead and take over companies and to control their destiny, either by manipulating the amount of R&D that they invest in adding to their capital, merging with other companies, etc. So you can take over entire companies. You can even take over entire industries. This game has 69 different industries plus banking and insurance. Over 1,500 companies, I believe, is what it starts off the game with. You have to deal with taxes. You have to deal with debt. You have to deal with bonds. You have to deal with industry crises. And there's even a cheat menu that you can turn on or off. So if you're a purist and you want to turn it off, you can. But there are scenarios that come up where you're faced with an ethical dilemma. Do you take the option that provides you with potential but risky profit, or do you take the safe route and turn things down? And you're going to get to see some of those in this series. This game is very complex but simple to play. So if you understand what it is that you're trying to do and how to do it in the game, and you're going to hopefully know that after you get done with this series, there are certain things that you're not going to get a full understanding of it because I don't use a few things in the game. For instance, call and put options I use very rarely, and selling short stock I don't do very often. About the only time I use that is if I own a company and I've sold it because I now realize that the stock has reached its maximum value. Then I may sell all of my shares, sell the stock short, and then actively re-enter the same industry in order to devalue that stock and make money both ways, both from the new company in the same industry and devaluing my former company. So anyway, let's get started and actually just start playing a game. So this is a game that I've already started to play. I've got about a little over 4 trillion in 2.5 years of play, but we're going to start from the beginning so that you can see what it looks like starting out. So let's start a new game. Yes, I want a student to start a new game. You're required to have at least 2 players. One of them can be the computer, or you can play against yourself or a friend if you want to, up to 5 players. Here I've identified the computer as iRobot. Player 2 is me, RakeM. And here you can set your beginning cash from 100 million to 1,000 million, or $1 billion. I see no reason to turn down free money, so I'm going to leave it at $1 billion. The game length, and this is ordered to have some sort of ending time. The maximum is 35 years, I'll leave that. And the difficulty level, I leave at level 1. It has the fewest restrictions. When you go to the higher difficulty level, there are additional taxes, there are additional restrictions and regulations and all sorts of things that come into play. I don't want to get you bogged down in that, so we're just going to start at difficulty 1. It tells you that it's about to randomize the database. Just click OK and it begins. Okay, I get to play first. Now, the way the turns work is you get 5 turns, or 5 actions that you can take before it becomes the other player's turn. But if the computer is the player that you're playing up against, which I imagine most of the time that'll be the case, you don't really need to worry about when it stops being your turn, because no time passes when it's the computer's turn. And then this is the initial message letting you know what the current interest rates are doing. It shows you what the interest rates are down there in the bottom left-hand box. But that message tells you what the trend is. Let's look at some of these boxes. In the top left section, that's the currently selected entity. So right now it's selected as me. I am not a stock, so I don't have a stock price or any other stock information. But it does show what my current available credit is. And the amount of credit that you're extended is equal to whatever your net worth is. Under my balance sheet, it shows that I have 1,000 million cash. All these numbers are in millions. I currently don't own any stocks. I don't have any other assets, and other assets would be bonds, stock options, that sort of thing. So my total assets come to 1,000 million. I have no bank loans or other debt, so my net worth is 1,000. All right, so we need to start looking at. Well, I guess let me talk about what's in the bottom box there. The current stock index, that's a conglomerated number of all the stocks put together. And then we have our prime interest rate. That's the same prime interest rate as there is in the real world. That has an effect on all lending. So if you have a AAA credit rating, you probably get 10 and a quarter. If you're a AA, it's probably 10 and a half. If it's just an A rating, 10 and 3/4, etc. So the worse your credit rating, the higher the rate you pay. The prime rate is just the basis for that. What the long bond and the short bond are earning, those are government T-bills. And then the commodity prices are all shown down below, along with what the current GDP growth is in percent. And let's see, is there anything else? Nope, that's it. So as far as the buttons along the top and down the bottom in the middle there, I'm going to show you what all those do in a more organic way. So as we play the game, you'll learn what those are. Like I said, the manual is 150 pages. I don't want to take you through all that without playing the game. Let's just get right into it, and I'll show you as we're going along what I'm using. So the first thing I want to do when I start a new game is to set the stock ticker to its slowest speed, and that will give me more time to make my decisions without the game actually running. So when the ticker is paused, no time passes at all, but when it's not paused, it rolls through time just as fast as you let it, and I'm going to set this now to 1 so that it goes as slow as it can go. Time management is just as important as money management in this game, since we are on a time limit of 35 years. Some of the other settings on this menu, by the way, you can turn on or off the cheat mode. And cheat mode is just simply the scenarios that come up and give you ethical dilemmas. You can also turn on or off the automatic display of earnings reports, of other pop-ups. If you have stock options that are going to expire, you can elect whether to automatically execute those or not. If you elect not to, then it'll come up and ask you when the time has come. You can take physical delivery of commodities if that's your thing. This is a new feature. I don't really know much about it just yet. We're going to learn together as we go along. And then you can set the size of the charts, and we'll show you some charts here in just a second. The autopilot's also a new feature, by the way. The autopilot will automatically manage your companies for you. And I have never used this. It's new to this version. I've never used it before. We're going to try it out, because once you get like 30, 40, 50, 60 companies under your control, it can be difficult to keep up with them all. So you can turn on the autopilot to make sure that you're, like, let's say you're in an industry that's booming, and so you have your growth rate set at 30%. And then all of a sudden there's a downturn in the market, and the growth rate is at -5. Well, if you don't physically, in the past, in previous versions, if you didn't physically go there and reset that growth rate, you could be sitting there and growing at 30% and just killing your own stock. But if I assume with the autopilot on, it will automatically make that adjustment. So what I would normally do is, when the earnings bubble would pop up, if all of a sudden I'm making way less money than I used to, that's when I would go and find out that I need to adjust my growth rate. And in that case, I can be finding out like a quarter or 2 quarters down the road from the downturn, whereas I could have cut off that growth and saved myself a bunch of money and headaches. Okay, so the first thing I want to do is I want to find an industry to invest in. So I go to the general menu, and the second one down there is industrial growth rates. And that'll give me a list of all of the different industries, their current growth rates, both long-term and short-term, and what the average return for each company in that industry is. What I want to look for is I want to look for an industry that has big numbers on both the left and the right. And this is strictly at the beginning of the game. Later on, I'm going to be looking for bargains where the number is big on the left and small on the right. Companies that are undervalued and that I can turn around. But in this particular case, I don't have that much money to work with, so I want to look for an industry that has large growth and a large return on capital assets. So looking here, it looks like there are several to choose from. Computer peripherals, nope, the return's too low. Let's see. Internet service, that looks pretty promising. All the numbers are in the double digits. Software looks good. Double digits on all three of those. So let's take a look at the software industry. So we select it, and we go back to our menu and we look at the projection, the industry projection. So here's a list of all the companies that are in the industry. And the main thing I'm looking for is a stock with a low stock price to net worth ratio. So anything between 80% and 150%. I don't particularly care about the credit rating just yet, but the lower it is, probably the cheaper it is. And also, if at this state in the game, I want to buy a company that has a net market cap less than my $1 billion. And in particular, I'm going to looking for something in the 500 to 600 million range. And what I'm going to do is I'm going to buy the company and then give it whatever cash I can that I have left so that it can pay off its debts. And what that will do, or as much of its debts as it can. So what that will do is it will immediately boost their earnings because their net worth has gone up. Their debt expense has gone down, so that should increase their income. And as a result, their stock price should see an immediate rise. Now, it would be a bonus if the company has solid management. And let's talk about that for a second. There's 5 levels of management rating in this game. There's grossly incompetent, which obviously is the worst. There's very incompetent, which is only slightly better. Somewhat mediocre, which is right in the middle. Reasonably competent, which is good but not great. And then very capable. And so we would like to have a company that is either very capable or reasonably competent. But generally a company that's not earning its top percent isn't going to be affordable, so we may have to go for somewhat mediocre. So let's see, we got 2 choices. We've got whatever that company is, and then Real Networks, both in the 140% range. And between the two, since this is the same percentage on both, I'm probably going to go for the one with the lower credit rating. Just because I can give them an extra bump in their income and hopefully get a bump in stock price out of it. So let's take a look at them. When you select one of the companies off the list, it automatically brings this entity information menu up. Over there on the left and all the text we'll get to, but for right now we're just going to look at their research and financial reports. And by the way, there's 3 reports that you're going to use over and over and over. The research report, which shows you basically a summary of all the information for the industry that they're in, their position in that industry, their earnings forecast, and just general information on the company itself. The financial report gives you all the numbers, like the balance sheet. So it shows you what cash they have on hand, what working capital they have, what capital assets they have, if they have invested in any commodities, other stocks, that sort of stuff. And then any liabilities, so bank loans, bonds, advances from their parent company, or in this case maybe me, taxes that are currently payable, and then their cash reserve, their hidden cash reserve. And all that paints a picture of the health of the company as it stands on that day. Now, the forecast for the future is where the industry forecast and summary come in, but we're going to get to look at those quite a bit, so we'll talk about it a lot. This is the financial report. So as you can see, they got 600 and change in assets, capital assets, and then they have a $350 loan. They're trading at 143% above their net value. Their net value is right there, and the next below that is their earnings per share per year, and that gives you an idea of what their trend is. So if we can beat that, if we buy this company and we can beat that trend, the stock price will go up. Okay, somebody already owns 9% of this stock, and we'll have to look and see who that is and buy them out if we're going to buy this company. And I think we are, because we have a good chance to make a profit on this one. So let's buy it. First, we're going to buy up the shares owned by the public. And this message is telling you basically that in earlier games this is a little higher, but this is the way it works. You can buy it for no markup, up to 5% of the company. So if you're just buying a company for income, let's say they have a high dividend yield of like 8%, then you would buy 5%, not pay any markup, and just take 8% off of whatever that 5% was worth. But if you're going to control the company, you've got to pay a premium. You've got to pay a brokerage fee. It's just how the game is. Same in the real world. And we're going to pay even more than that per share for the additional 9% that's already owned by someone else. Okay, so we're going to buy 91%. And there it is. We bought 91% for $600 and whatever dollars. And we've obtained control of the company. Control of the company is if you own 20% or more and you're the largest shareholder, then you control the company. All right, so let's buy the other 9%. So here it is. We own 91%. It's currently not traded because all the stock is privately owned. And then here is my financial report. As you can see, I now have 300 and change in cash, and the rest is in the stock that I just bought. I will look at that some more at the end of the quarter. All right, so let's buy the rest of Real Networks from the high-tech fund or whatever it was that owned it. Okay, we're going to buy 9%. And we have to offer a premium in order for them to give it up. So, yeah, we understand that. And how much percent do we want to give? Let's start off with 25. All right, well, let's try again. Let's try 32. Thinking about it. Still rejected. All right, let's try 36. Thinking about it. Yay! All right. We now own 100% of the stock. All right, now the reason why it was important for us to own 100% of the stock, by the way, is because you can only contribute cash to companies that you own outright. There's the company. They've got $47 million in cash, $350 in debt, and we have $294 million left in cash ourselves. Now we could transfer. We could give Real Networks a loan of $290 million or whatever, and they would still owe us, and they would pay us just like they would a bank, except that becoming to us instead of the bank. Well, that's great for us, but it doesn't improve their bottom line. So I'm going to contribute cash directly to them, and that will increase their earnings. Therefore, they will have a bump in stock price. I'm going to put 290. So let's go to Real Networks, and there it is. They've got the cash now. So let's pay down their loan. So I go to the miscellaneous menu, repay loan, and I'm going to pay all the cash that I have remaining toward the loan. Okay, so let's look at the industry. Well, the first thing that I want to do is I want to adjust Real Networks R&D spending. And I want it to be 1% higher than anybody else in the industry. So the highest one I see here is 9%. So I want to make it at least 10%. Let's actually make it 11%, because we currently have a return of 26% on our assets. And that will go up over time the more I spend on R&D. I'm going to change our growth rate to 15 because the industry is growing at 18. And we are going to set our R&D at 11%. There it is. All right, so we can look again and make sure that the changes we made take hold. And if you notice, the reason why I wanted to come back here, for every percent that you spend on R&D, takes it directly out of your net return. So I had 26% there. We increased our R&D spending by 9%, so our return came down to 17, exactly 9%. But that R&D will ultimately increase our return, so I'm okay with that. Mostly because, I don't know if you noticed, but Real Networks has a mediocre management. And the more we spend on R&D, the better the management will become as well. And the reason why you want competent management, by the way, is the rate of return increases as that management rating increases as well. All right, so I'm going to go ahead and start the simulation. It's January 1st, and we've done all we can do for Real Networks. We've given them all of our cash. We've adjusted their growth and research parameters. And the next earnings announcement will be on February 11th for them. So it's time to get the clock running. Let's take a look at the research report so that we can see what the projected income is for the next quarter. And incidentally, this earnings projection is not updated based on the changes that we just made. Almost all the changes that we make, the earnings projection isn't updated for like a month, until a month after they've been made. So anyway, originally this company made 25 cents per year or per share for the full year the previous year in 2015. And the earnings for the next quarter are projected to be 12 cents. Over 4 months, that'd be, 48 cents? So it's already projected to beat what it did last year. And hopefully what we just did will improve it even more. But the main thing is that the management there, second line from the bottom, is that it's somewhat mediocre. And that's what that investment in R&D is meant to do, to improve that rating. All right, at this point, there's nothing left for us to do. We've given the company the best advantage it can have. And the next earnings report isn't due until February 11th. So let's just go ahead and fast forward to that, because there's really nothing to do between now and then. Hello, what's this? We got some kind of news for our company. Let's see. Oh, JP Morgan Chase wants to buy us. Well, we love you, JP Morgan Chase, but I don't think that's going to be happening. We made 11 cents. So we didn't quite make our projected return of 12 cents, but it's still better than what we did last year. We only have 11 million outstanding at the bank, and we have more than that in cash, so we're in good shape financially. Anything that happens with your stock over the quarter, it all goes underneath there on this earnings report. So there you can see where I bought the 91% and how much I spent on it. Then I tried 3 times before they finally gave me the additional 9%. And then I sent them 290 million cash. And then we were notified that JP Morgan wanted us to sell to them or merge with them and how much they're offering. So if something happens and you forget what it was, or the pop-up comes and goes too fast, you can always check this report to see what it was that happened. Now let's take a look at the research report and see what it's going to be next quarter. So now they're forecasting income of 17 cents per share. And more importantly, you'll notice that my management has improved from somewhat mediocre to reasonably competent. I'm very happy to see that. Okay, so we have no additional cash right now, and neither does Real Networks. Oh good, our earnings jumped from 17% up to 22.9. That's what having better management does for you. And everything else still looks good. Nobody's growing more than what the industry is expanding. So that return should continue to go up. Looking over here to the left, you can see I still have the $4 million in cash. The stock price has gone up, so I've already made a profit if I were to sell it today. This tax basis report, you get to it off the entity menu. So when I'm the selected entity and I go to the tax basis report, here's how much I spent on it, and then this is what it's currently worth. And when I sell it, I'll have to pay capital gains tax on whatever the difference of those two numbers is. It also shows the dividend yield if you happen to be giving dividends, but we're going for growth right now, so there's none. All right, and here is the balance sheet. Shows what the earnings were. So far we made 11 cents. We're supposed to make 17 next quarter. And that'll actually beat all of last year. Oh, what a surprise. JP Morgan Chase doesn't want to buy us anymore. All right, we don't have anything else to do until May 11th when the next earnings report comes out, so let's just fast forward to that and I'll be right back. And here we are. Our second quarter earnings were 26 cents per share. So not only did we improve from last quarter, we also beat the projection. We got 10 million cash and the $9 million debt, so Our cash went down because we increased our growth. Looking at the financials, our net worth is up into the 700s now. Our stock price has jumped to 20. We've beat all of last year in just the first 2 quarters of this year. And everything looks good. So here's our research report for next quarter. They're estimating 24 cents per share. And as long as the market conditions don't change, that should continue to grow. But we slipped in our management, so we may have to up our research and development to keep that going back in the right direction. Let's take a look. Take a look at the industry projection. Oh wow, everybody's up their everything. Their R&D is up, their industrial growth is up, their growth percentages are all up. That may turn the whole industry sour on us. So looks like half the companies have started growing at a rate exceeding the market demand. So let's up our R&D to get that management rating up. So we'll change it to 16%. We're going to fast forward one more time because I think we're going to have to sell it at the end of this next quarter. Okay, so here we are at the third quarter earnings report, which is up. But before we talk about it, I just want to show you one of those pop-ups that went by. This is the message from the Federal Reserve that they are shifting to a tight money policy. These pop up from time to time, and it's really, really useful when they shift to a tight money policy or when they shift to an easing policy, especially if it's the second time in a row that they've shifted to the same policy, because that means that it's a prime time to take advantage of interest rate swaps. So if the interest rate falls below 4%, or if it climbs above 12, we're going to be given some serious thought to engaging in some interest rate swaps. But let's get back to the earnings report. So once again, we beat the projection. We made 26 cents a share instead of 24. Our cash is still 10 million, and we repaid on our loan. So all that looks good. My only issue right now, or my concern, is that the industry growth situation is deteriorating. Oh, what's going on now? Somebody else want to buy us? Okay, this is one of those cheat scenarios that I told you about. We have been working night and day, fly-specking several million lines of code in an attempt to find the bug that popped up several months ago in simulation testing of our Raptor Global Air Traffic Control System software. As you will recall, something appeared to go haywire. Okay, let's see, bottom line, what are our choices here? So I'm being given a choice. I can make $347 million, or I can protect all the people that fly on airplanes in the country. Gordon, what do you think?
Greed is right. Greed works.
Absolutely. Let's release it and make $347 million. Now remember what I said, it takes about a month for any kind of change or any kind of event to take effect on the earnings projections. Now we already have the money. The $347 million is already in our balance sheet, but the revised projections haven't hit. So it's still showing 19 cents. So it's showing that we're going to earn less in the fourth quarter than we did in the third. But that will change, and we'll just let it run, and as soon as the stock price goes up, we'll know that the projection has been updated. So just keep an eye on the stock price over there on the far right as we continue to run the simulation. You see our stock, our return has dipped down to 17.9%. That's not good. All this expansion is just killing the industry. So I guess Raptor going online is probably the best news for us, because it'll give us an opportunity to get out of this industry with a nice profit. Okay, so remember we were talking about what this menu has to tell us? So it shows us what the short-term industry forecast will look like. And there it explains that the overexpansion is just killing the returns. So that's good, but with the overexpansion stripping out the profit from this industry, I think we're going to have to get out of it. Look at all those double digits. And all in the 30s, 20s, and 30s. It's not good for us. So keep an eye on the right-hand side there next to real networks. That stock price should jump to like 25, 30, maybe even higher. There it goes. All right, so the revised projection is $1.33 per share. That is a huge jump. Our stock should just go through the roof at this point. So let's talk about what the share price needs to be for us to sell. So I talked about earlier I wanted to make $3 to $4 billion off of this company. And if that's the case, then we need to make enough after taxes we want to make $3 to $4 billion off of this company. So after we sell it, we'd like to have $4 billion in our bank account. In order to do that, we have to sell it well above that price by about 20%. And the reason for that is because we have to pay taxes and we have to pay brokerage fees for the transaction. Also, if we're selling 100% of the stock, there's going to be a slight markdown as the result of the sale. So somewhere in the $50 range is probably going to be about right. let me show you what the tax rates are. So this is the economic statistics, and as you can see, tax rate on capital gains is 18%. So we have to add 18% to our share price. Let me pull up my calculator here. We take 4,000, which is what we want to make. We multiply it by 18%, and 47.20 is our minimum. And we'd really like to have 50 to account for the drop in price as a result of the sale and the brokerage fees. So as soon as that price hits 50 over there on the right, we're going to go ahead and sell it. Almost 40, 42. Keep going. There we go, 50. All right, so we're going to pause the simulation, and we're going to sell that sucker and take our money out of there, because that's not a good industry to be in anymore. So select it. 100%. Yes, we know we're going to pay the tax capital gains. And there it is. We sold it. And we made over $3 billion. $3 billion and change. Just that easy. And we lost control, but that was, of course we did. So, we've taken our $1 billion, and in 9 months' time, we've run it up to almost $5 billion. Now, that $4 billion and change, that's not what we actually get to keep, because we still haven't paid our taxes. So on here, you can see where we have an estimated tax, year-to-date tax payable, $623. So you still have to deduct it out of that 4455 number. So we're going to end up with 3,800 and change, or 3.8 billion and change. But yeah, we did pretty good on that one. I'm going to go ahead and let the simulation run through the end of the quarter and stop it on October 1st, because all the taxes are paid at the end of the quarter. So here it is again. You'll see that I paid 500 and some million in taxes. Not the full amount, but close. And so my cash on hand now is 3.8 billion and change. So not too shabby. 350% return in 9 months. From 1 billion to 3.8. So the question is that kind of growth sustainable? If it was, here's what our net worth would be over 35 years. I don't even know what you call that number. I think it's nonillion. I think that's the word. Absolutely doable. There's no reason why we couldn't have this kind of a return. 72 nonillion at the end of 35 years. Okay, actually, that's not actually sustainable. The market's just not big enough for that kind of numbers. What's going to happen is, as we get bigger, we're going to be in a situation where the market can't bear the kind of growth that small companies can afford. And so as we take over industries, etc., we're going to have too big a market share to be able to double our sales every year. Even the software industry that was enjoying 18% growth a year, well, obviously you can't double in a year and still be exactly as profitable if you have a major market share. So this is a more conservative estimate that I use for the first 16 years. It's 100% growth per year. Now for the first few years we're going to outstrip that, but it's going to slow down over time. The most that I have run my totals up to is about 100 quadrillion. I'm told by Michael Jenkins, the developer behind this program, that the average, or the highest that he's seen, is 200, or in the neighborhood of 200 trillion after 35 years. So 100% per year, at least for the first 16 years, is what my goal is. After that, it's kind of a gray area. The question is whether or not the growth is sustainable. I don't know that it is. We're gonna play the game, and we're gonna see what we can do. So let's see how we stack up against the computer player. What you do is you go to the general menu, and then you go to Who's Ahead, and that brings up this report. So here we seem to be outpacing the computer. He's only made 60 million in the first 9 months. I think we've got him beat so far. Now below that, it'll actually show you, below those totals, it'll actually show you what your opponent is investing in. So his bank is JP Morgan Chase Bank, and he was the one that was trying to buy us. So what stock he owns, and he's currently the CEO of the company that he owns. We never made ourselves CEO of Real Networks, so we are currently unemployed, and we've sold off all of our stock holdings, so we don't have any at this point. But we do have him. We do have him beat in the cash arena in total net worth. And on the beginner level, it's not really that hard to beat the computer player. And if I had the option to make him a little tougher on this level, I would. But he really plays cutthroat in the more difficult levels. But anyway, that's it for this episode. I hope you've enjoyed the episode. I hope that you are intrigued by the game, if it appeals to you. We're going to be doing some more episodes and see just how far we can run it up. So until next time, this is RakeM saying, have a good one.